Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index extended its second straight weekly decline, briefly breaking below the 99 level late last week. Investors are worried that the backlog of economic data may reveal signs of a slowdown. It's a classic buy the rumor, sell the fact move. Once the government reopened, uncertainty dropped and profit taking kicked in. With equities, bonds, and metals all selling off together, the dollar was pulled into the same risk-off spiral. WTI crude traded just under $60 a barrel last week as the market balanced two themes: ongoing concerns about global oversupply and the potential disruption tied to sanctions on Russia's Lukoil. Prices slipped more than 4% midweek after fresh data showed supply continuing to outpace demand into early 2026. OPEC's latest monthly report also scaled back its earlier deficit forecast, triggering another wave of selling as funds cut long positions. Spot gold saw sharp swings last week. Prices briefly rallied over 5% to a 3-week high near $4,245 before reversing lower. The US government's reopening after a record shutdown initially eased uncertainty, but it also sparked broad profit-taking across global markets. At the same time, a growing divide within the Federal Reserve over future policy weighed on gold. In the long term, data gaps, inflation risks, and geopolitical uncertainty still support gold as a core safe haven asset. Yen traded above 154.5 last week and briefly approached the 11-month high near 155.05. The yen struggled to attract meaningful buying after Japan's Prime Minister said she prefers rates to stay low and called for close coordination with the Bank of Japan, cooling expectations of an imminent hike. Still, traders see a 24% chance of a December move. Meanwhile, Japanese officials continue to warn about excessive yen weakness, keeping intervention risks on the radar. Euro extended its 8th straight session of gains last week, climbing from early month lows near 1.146 to a high of 1.165. The move was driven largely by broad US dollar weakness, as markets brace for a wave of delayed American data following the government shutdown. While the Fed sounded reluctant to add more policy easing, risk sentiment improved after Washington reopened. Traders now look to upcoming central bank guidance, with the ECB expected to keep rates steady and the Fed still split over a possible December cut.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.